Hi everyone, welcome back to ASX Market Watch. Thank you so much for joining me, checking out the entire world from a chartist point of view today. Great pastime to have, and there's actually something really exciting that I want to share with you this week. It's a fantastic and beautiful thing on the charts. It's one of those poetic moments, and I absolutely love it. Cannot wait to share that with you. But of course, why do we look at these charts? We look at them because we believe that 3 out of 4 stocks will follow the overall index. At least that's what market wizard William O'Neill believes, and that's fair to say that he's possibly correct in that case. Now, so very simply, if we know which way the index is heading, we know which way 3 out of 4 stocks might be heading as well. Really ridiculously simple stuff, guys. And as you know, we check out the entire world. We check out America, Europe, Australia, and Asia as well. Beautiful stuff. And where will we start? Of course, the home country, at least for myself, the All Ordinaries in Australia. Now, beautiful thing. This is the current chart on the All Ordinaries. This is all of the stocks over the entire market make up this index to sort of give us a view of where the overall market is heading. Now, last week I said, be warned that this zigzag pattern is happening. And what we were looking for was a little zigzag pattern down. As you can see, it's like a little ABC or 1, 2, 3 correction. Now, that has almost unfolded, and what exactly happened, this is the beautiful part, is that this bar that could have completed that short-term exit signal, it did happen. It went down throughout the day, and then it closed well above the halfway mark, and also above that little trough there. So it did not complete the exit pattern, and in fact, it gave us a fairly bullish sign, because it means that buyers came back in throughout the day and actually pushed that market up. And what happened after that? The markets continued to rise. So that's a fantastic thing. So yes, that exit signal we didn't get. I warned you that it was happening, but basically it didn't come to fruition, and now the market is still heading upwards. Now again, like a lot of people, some people may be shorting the market. I prefer to sort of go with the overall flow, and again, just because there's a lot of support at the moment, and that's the reason why, even if we did get that exit signal, I still was sort of just going to be monitoring my own positions, just because there is a lot of support at the moment, guys, at 4,800, and quite frankly, it looks as though the call that we made last December of 5,500 on the All Ordinaries, it looks as though that may not be too far out of reach now. At least we've still met our initial target of 4,900 on the All Ordinaries, and so yeah, not a drama. All we're looking for is an exit signal now. Haven't had one yet. Happy days. Follow the trend. Go for gold. That's all I have to say. Really simple stuff. Dow Jones is the same. Like, I mean, there's really nothing to it, and it's possibly times like this in the market that this is the Dow Jones chart, by the way. It's possibly times like this in the market that are the most boring, but at the same time, it doesn't matter because the stocks are rising. It's good stuff. It means that the 3 out of 4 stocks are potentially rising, and that's what we want to see. At least if you're going long, it's a good thing. This is as I said, this is the Dow Jones, and have we had even an inkling of a trend turnaround? Not even close, guys. And the market continues to rise. But guys, always it does pay just to sort of keep an eye on the overall trend and wait for that confirmed trend reversal. And as we said, we've got support basically now at 11,800, 11,600, and 11,000. So there's lots of levels of support there, which is a great sign, obviously, if you're buying shares as well. Follow that trend, guys, and sort of the trend is your friend, as they say. It's a little bit of a ridiculous saying, but it does sort of help you out. Next, so really, there's not too much more to say on that. And again, the call that we made for the Dow Jones back in December was 13,000, and the reason for that being from an Elliott wave point of view, guys, and the same for the All Ordinaries, is we've got 1, 2, 3, 4, 5, and if I just quickly do this really quickly, here we go. This one that I'm just doing here is our wave 3, and basically wave 5, which is the wave that we're in at the moment, so this last wave here, that it will usually run between 50% and 75% of wave 3. Okay, so basically, if wave 3, however, goes less than 161.8% of wave 1, which it did in this case, then there's a high probability that this last wave that we're in now will be the longest of the waves. What that means is that as the longest of the wave, the trend will possibly be an extended trend as opposed to being quite a short trend, which the last wave usually is. I hope that makes sense. And basically the long and the short of it is that there is a potential for the market to get to 13,000. Actually, 13,375 would be the extension based on an Elliott wave projection, guys, on 161.8% of the last move. And again, if that's a whole bunch of numbers to you, basically that's I mean, the long, as I said, the basics of it is we could potentially be seeing this extended wave, and obviously it pays to follow the trend as well. So, simple stuff. Doesn't have to be complicated. This is the FTSE as well. Exactly the same thing happened on the FTSE, guys. As you'll see, we didn't get our exit signal. We got an ABC correction, and same thing. Oh, look, it closed just below the previous trough, but that tail is so long, it means that the buyers have just come well back in. It would not be an opportunity to be an exit signal based on that. And as you can see, the market has continued to rise again still. One last thing on the FTSE as well, we've got basically two colliding forces here. As you can see, this single bar here, which the sellers have come back in, and now this single bar here, in which the buyers have come back in and pushed it up. So they've pushed it down here, pushed it up here, and as you can see, now we've got this beautiful little sandwich, and very, very simple. There it is there. Now, what does that sandwich actually look to you? Like, does that look like something that we covered recently, like a Darvas box, perhaps? Yes, it does, and highly potential as well, because where is it happening? It's happening at the consolidation around the previous highs. Here's the previous high, here's the previous high, consolidating around that level. Why does it do that? Because we've got a whole bunch of sellers coming in. They bought around this level down here, and they're like, I gotta get out of this market now, I made my money, I'm out of here. But then, all these people are seeing a new market high, and they're saying, I want to get in on this action, don't leave me behind, get me on that train. And they're starting to buy as well. So we've got a little bit of colliding forces happening, and that's when we get consolidation. It's not rocket science again, like very, very simple. Just as a matter of interest, guys, here's the uptrend line here, and where did the market find support? It found support at the trend line and the previous high. So those two things just sort of converged and gave us a really solid signal, which is a good thing. I mean, it's just a beautiful thing. So yeah, basically, if you were to sort of weight a potential exit signal based on a Darvas box entry, it's just a continuation pattern entry. It's not rocket science, guys. It's very, very simple. It would just mean an entry on a close above this high, and basically, the price may bounce around in this level for a few more days or weeks yet. Last but not least, guys, is Asia, is the beautiful, beautiful Asian market. This is China. This is the Shanghai composite in China. And we watch China because China's such a massive, massive country, and it's consuming so many resources, especially Australia, because Australia exports a lot of resources. This is a big thing for us to watch down under here in Australia. It's a good measure, because if China starts to slow too significantly, then that's something that we want to be wary of down the track. But again, at the moment, obviously the market in China is in a short-term downtrend. It is also in a medium-term downtrend. What we're looking for now, as you can see, the market is closed above the trend line, and I'll just enlarge that a little bit there. What we're now looking for is a little zigzag movement, so basically a higher trough, and then for price to go through the previous peak, and that would just basically confirm it. The reason why I wanted to do that is because when we have a higher trough, it just confirms that there's buyers supporting the market. Obviously, anyone can give us a short-term move, like of a couple of days, but if we've got sustained buyers coming in, then we'll have that higher trough, and then the little zigzag pattern upwards. So that's the real reason behind that, guys. And that is the end of your Market Watch Weekly. It's so simple, and there's a lot of beautiful things happening. And again, the markets are sort of working in tandem. They're working together, and they're in conjunction with each other. The world is super connected at the moment, and it is a beautiful thing. At the moment, follow the trend. The trend is your friend. Happy, happy days. And until next week, guys, I will see you next week. And hey, let's hope the market's still a little bit boring, hey, because I mean it means money in the bank a lot of the time, which is a good thing. Okay, guys, I'll see you next week. Have a great week of trending. Bye for now.